Assalamualaikum to my lecturer, Sir Azam Yaakob. Today we are going to present about cut-off assertion. My name is Nurul Nabila binti Muhammad Fauzi and my partner is Nurul Fatihah binti Muhammad Rusdi. Okay, so now I am going to talk about the introduction. So what is a cut-off assertion means? Cut-off means that transaction and event have been recorded in the correct accounting period. For example, if the good delivered prior to the year end, they are included in the cost of goods sold and not in the inventory. Second example is salary and wages costs recognized during the period relates to the current accounting period. So any accrued and prepaid expenses have been accounted for correctly in the financial statement. Next is the cut-off procedure. Cut-off procedure or cut-off test is to know whether the revenue transactions are recorded in the correct accounting period. Sale revenue may be recognized in the wrong accounting period due to the complicated process of the sale order, shipment, and sale invoice, or the client may intend to move accounting transaction from one year to another in order to increase the bottom line. Okay, so now is how the procedure is being carried out. First, you need to select a sample of sales invoice around the year end. Secondly, inspect the dates on the invoices and compare them with the dates of dispatch of goods and trace to the dates recorded in the sales journal and accounting record to ensure the correct accounting period entries. Thirdly, select a sample of written document for sale return around the year-end and trace to the related credit entries.
Next is the cut-off case study. Okay, so this is the background. As you can see, the background of Bling Bling company. Okay, so the date is on 15 November 2007 and your audit firm, KPDA Corporation, has been approached by Bling Bling Corporation, a national chain of jewelers, to tender for their statutory audit for the year ending 31st December 2007. You are an audit manager working at KPAD and will be managing the audit of Bling Bling if KPAD is appointed. KPAD is a large audit firm with branches around the country and in Europe. The firm has over 5,000 clients in many different industries. You have a meeting scheduled with the Chief Executive Officer, CEO, and Finance Director, FD of Bling Bling next week to discuss the contract in more detail. You have carried out some research on Bling Bling by reviewing their website, brochures, and also by reading articles from the national press, and have identified the following key points. Okay, so the first one, Bling Bling was established 10 years ago and is owned and run by two entrepreneurs who have extensive experience in jewelry industry. Bling Bling is a jeweler with 66 high street stores throughout England. They buy high-value jewelry from Italy, mainly gold and silver, and sell it in their high street shop, online, or to other jewelry retailers on a wholesale basis. The online business is relatively new and has been operating for just over 1 year. And the article in the national newspaper in September 2007 indicate that the price of gold was likely to fall dramatically during the following month due to the upturn in the world economy, with major investors moving their fund out of gold and into their other investment area. Okay, so point from meeting with the FD informed you that Bling has had another successful year and have opened another 3 stores at the start of 2007. The director have asked your firm to commence the audit immediately because audited accounts are needed by the bank by 5th February 2008. Bling would also like your firm to prepare their tax computation for the year in addition to the audit work. When asked why the previous auditor left, the ECO indicated that there had been disagreement with the previous auditor about a certain disclosure in the financial statement in the previous year. Okay, so point from meeting with the KPID audit partner, Tom Perret, partner of KPID, would like to know more about the disagreement from the previous auditor. You conclude that the audit firm will have the skill to carry out the audit as it is already audit another high street chain of jewelers. In addition, Tom's brother-in-law is a director at Bling and should be able to assist with any difficulties the auditors have. Tom raises his concern over staffing as it is busy time of year for the audit firm. So that is the background of the company of Bling. Okay, so the question goes like, you attended the physical inventory count at Bling year end of 31st December 2007. The company does not maintain book inventory records, and previous year's audit have revealed problem with the purchase cut-off. Your audit test on purchases cut-off, which started from the goods received note GRN, have revealed the following result. Okay, so this is the table as you can see. Okay, assume that the goods received from before the year end are in the inventory at the year end, and goods received after the year end are not in inventory at the year end. Okay, so from the result of your purchase of our purchase cut-off test described in the question. Okay, so for the question A, they need us to identify the cut-off error and produce a schedule of the adjustment which should be made to the reported purchases and payables in the draft financial statement to correct the errors. Okay, so in the list of items given in the question, purchases cut-off is correct for item 1, 2, 7, and 8. So the adjustment to profit are the item number 3, which is GRN that recorded twice, purchases and payable to be reduced, are minus with both item number 4 and 5, which is invoice not included on purchases ledger, and add the invoice included on purchase ledger incorrectly, which is the total is 4,110. Okay, so for the question B, they need us to comment on the result of your test and state what further action you would take. Okay, so the test has highlighted 4 errors in a sample of 8 items, an error rate of 50%, which is very high. With the high error rate, there is evidence of serious purchases cut-off errors. Okay, and to quantitate the potential error, a larger sample of items should be selected covering a longer period. It is suggested the period should cover 2 weeks before the year end to 2 weeks after the year end, and a greater proportion of GRN should be selected. Okay, so if there are cut-off error at the end of this period, for example, 2 weeks before the year end and 2 weeks after the year end, okay, the period for checking cut-off should be extended. In addition, the company management should be notified of the problem. They could help by checking cut-off and giving me a schedule of the item they have checked and the error they have found. Okay, as further checks of purchases cut, I would check purchase accrual at the year end. They should be for goods received before the year end, which have not been included on the purchase ledger before the year end. A purchase accrual should not be included where goods are received before the year end and the purchase invoice has been posted to the purchase ledger before the year end, or goods are received after the year end. In addition, I personally would check the reconciliation of supply statement to the balances of the purchases ledger and investigate any difference. For instance, if there are any invoice on the supplier statement which are not on the client purchases ledger, I will check the goods were received after the year end. If they were received before the year end and were not included in purchase accrual, there would be a purchases cut-off error. Okay, so this word should quantify the total purchases cut-off error, which should be included in the summary of unadjusted error in my audit working papers. So that is all from us. Thank you and have a nice day.